This is Short Hammer. It is the 16th of October, 2022, and this is Trading Zones. Missed last week's video, doing a big celebration for my daughter's birthday, and it just honestly, when it comes to this and whatever I do, is always family first. So my apologies for that, but um, crazy week of trading, and today I'm recording this video with my youngest son hanging out with me. He's watching a little bit of TV. Almost time for some football. So let's get into it. So looking at the RTY, um, what's interesting, and this is the other thing to note, right? Everyone does these videos differently. For me, this is more of a watch list, and I don't like to dig into stocks too often before I do the video. I kind of would I like you to hear exactly what I'm thinking real time. Like when I pull this chart up, I want you to hear my thoughts as I'm going through the thought process of what I'm looking for in this ticker and what we saw the previous week and what patterns we're watching for the current week, right? And so what we're trying to find are patterns. Do we see any repeatable patterns that we could find some short-term entries and exits off of? That's the entire thing, right? Not tips or anything. What patterns do we see? So let's see what we see here. So looking at the RTY, right? And remember that that's financials and small cap. So if we look here, and one of the patterns that I love to play are M patterns, right? So for me, I would look at this and say, oh, this is like a janky M pattern, 1735, and the top of this bad fella is 1781, right? And so the way that I would look at that and say, okay, so if we break below this 1735 area, candle closes below it, the next candle, when it pushes up, I fade that, and my expectation is what? My expectation is that it will go the distance between the this area here and the shoulder, right? And so everyone looks at it differently, and everyone may trade this differently, right? And this is a weird pattern, but the pattern is also here again, right? And I'll look for the pattern the other way. If I'm looking for a W pattern or M pattern, or I'm looking for a cup and handle, I love to play patterns. I am a pattern day trader. I trade patterns during the intraday and short-term swings, purely patterns. If there is no pattern, there is no trade. That's just how it works. Either it's a trend, it's a pattern. That's me. So what we're looking at now is we're right here at the 1689 area. And remember, we have a bunch of financial earnings this upcoming week. JPM, I believe that they beat, but even with JPM beating, right, that didn't stop the market from dropping. Okay, so with these other financial earnings that are coming, what we have to see is if all of them beat and the market still goes down, what does that tell us headed into earnings season, right? And so we always try to look for clues when the earlier earnings come to see if there's a sentiment around earnings season, that even if something beats, does it sell, or even if things in large miss, does the market still bid up? So that's what we're waiting to see. And Netflix is coming up next week, so it's going to be really interesting. Netflix and Tesla, I believe. So back to RTY. um, so what it looks like here is, so what I would be looking for here is, do we see a continued drift down back to the 1662 area? That's possible, right? So when we push below the 1662, going back to the 23rd of September, each time the buyers have stepped in, we haven't seen back-to-back red candles below the 1660s, right, on the 4-hour chart. So if that changes, that might show us that the pattern is changing here and that the buyers are no longer stepping in. And then we may be able to expect to see maybe extension to the 1630s or 1612s or lower, right? So that's what's interesting here as we're looking at this. So where we are now, wait to see if we see a dip down here to the 1660 area. And do we dip below, or do we see a secondary red candle below? Playing this intermediate area, trying to go long or go short, is kind of risky. The reason why it's risky is that there isn't strong conviction in this middle area from the buyers or the sellers. So if you're getting in here, you're risking the chance of being squeezed in either direction. So that's why you had to be careful. You can say, I expect this pattern to continue, but what if it doesn't? What if it pulls one of these bad fellas and then it pops back up here? can your risk, like if your risk is, I could risk 10 points or 15 points, or whatever you can risk, does that fit within your risk parameters? One of the worst things to do on an entry is to enter something in a midpoint and then be stopped out by a few points, only to see that play then goes your way right after. That's why it's really good, right, to measure your entries against your risk. Like, where is my risk? And to give yourself as much room as possible based on your risk, whatever your risk profile is. So, watching this, for me, if I was to be trading the RTY, I've got no entry here, right? So, what I would need to see, because to me, this is like a little channel that we're in here. So, we'd have to either sell below the 1660s and there to be a continued bearish candle below that, or push back down to the 1660s. And then if I decided that I wanted to try a long, which would be kind of tough, but if I want to try a long, counting on that we get a snap back into this little channel area and push back potentially to the 1715, 1720-ish area, that's a potential trade, right? But I probably wouldn't take that on the push down. I'll wait for a reclaim and then a push back up to show me that the buyers are still there, right? And they're still trying to keep this within this range that we see here. If we look from the 23rd of September to now, right? The 14th of 13th, 14th of October, last days, but 16th of October, I guess you could say. But we want to see if it stays in that range. That's what I'll be watching. So if we do drop the 1660s, 1630s are next, and 1612s, then let's open this bad fella up and see what we really have going on the 1 week chart, right? So on the 1 week chart, if we look at this and where we are now, we're at these tops. So if we were to stay within the previous range of where we were, right, back here in 2020, then there's a potential that we drift down here into the 1614 area and that it wouldn't even be surprising. So when you see us reversing here, you see these candle congestions and then this area here, right? So when you look at this, what this is the floor. I would call it the floor of the breakout. Look at this. Look at this structure, right? Look at this structure here. It's like you're coming off the mountain and you're back to here, right? So this is the entire breakout structure from November 2020 till now. Look at this structure here on the RTY. That's what we're holding. Below that, we have a different structure, right? That drops back down into the 1200s or whatever, right? Or even down to the 1450s, right? So we're trying to hold this breakout structure. This candle here, look at that breakout structure. We're trying to hold that breakout structure. And the low of this candle is around 1649. So isn't that interesting? Look at these lower wicks. We're trying to hold this structure. If this structure breaks, maybe we'll see acceptance lower. And we're looking at the 1560s, maybe even the 1520s. That's looking at the weekly chart, right? And the reason why we're looking at the weekly chart is because the last time that we were down at these levels where there was a potential, right, where we were threatening to push lower, it was way back in the 2020s. And so that's what's interesting when you look at this and you look at the structure. It's something to consider in your trading, right? How much? So when you saw this initial dip, right, and this is what's interesting, you saw this initial dip here in June, and then we bought up out of this. So we tested the breakout from November of 2020. We tested the breakout, pushed us back up, and we pushed back into the 2000 area, rejected, and came right back to test it, right? And the way that we look at that is whenever sellers or buyers come to an area and that area holds and it comes right back to test it, be wary, right? Because the last time we tested this area, there was no acceptance. The first touch on the 4 hour on this weekly chart, the next week we bought up. Then look at these wicks, strong rejection wicks. This time, look at these wicks. We hit it. It's a little stickier. Look at the next candle. Next candle, we went up, but look, right back down. Next candle. We're not seeing the rejection from here, the strong rejection, the strong heck no. Look at these heck no candles. Look at these wicks, right? And if you're trying to figure out what dates I mean, look at June. Was this June? The 27th of June, the 5th of July, and the 11th of July. Look at those rejection. These are some heck no candles. We're not going down there. Look at that rejection. And look at this time, right? The last 3 weeks, look at the stickiness. It's stickier. So unless something changes, there's a good chance we do see acceptance lower. So we'll see how this works out. But it does seem as if these candles and this area is a little bit stickier than it was the previous time we tested. So we just have to see, right? And that we're heading into earnings season, it does give us an opportunity for a change in sentiment and for the catalyst to change. We're headed into earnings season. Also, we're headed into the holiday season. So there's a lot of things that are sort of going on right now that could create some type of movement. Plus, also the hopes that the Fed is backed into a corner and they're forced to start purchasing bonds and start investing in, sort of putting a floor into the market to sort of motivate buyers to think that this may be the bottom. But that to me is all rumors. What I'm specifically looking at is the stickiness around this 1660 1680 is really sticky down here in the 1600s, and we don't want that. Like if you're a bull, you don't want it to be too sticky down here. You prefer separation above the 1760s. You want to get back in through this zone here. Let's push back to the 4-hour and open the chart back up. And we got a perfect back test into this zone here, the 1740s by the 1790s. But this is just interesting to watch here on the RTY. I believe we have Goldman Sachs upcoming, and probably Bank of America this upcoming week. So we'll see. And we also have big tech earnings this upcoming week also. So that'll be interesting. So let's keep it moving. Over to the MES. So looking at the MES, so we did drop those below the previous lows. Then we sort of remounted, but we're right back down here again, right above this 3588 area. So if we're looking at this, right, other than this break above, it feels as if this shelf, if I was to draw a shelf, it looks like we're in this shelf. Let me draw this real quick. I think it's interesting on the MES. Rectangle. If I was to draw a shelf, I'll draw it from here to here. This would be my shelf. Oh, I want this to come on. You need just stick, buddy. It's to 3587. Boom. That's my shelf. And maybe I need to color this something different. But see, maybe I changed the coloring on this. I don't like the gray. Let's see what if we make it a light blue. It's not giving me the color I want here. Definitely don't want greens. Hey, buddy, you okay? The son is playing with all his loudest toys. It's not giving me the tint that I want here. That's okay. I'm not worried about that. But you can see that, right? So basically the 3818 by this area down here around 3588. And so what we want to look at is, and this is where I think it gets interesting. So we entered this area back at the end of September. Look at this pushback here. And pop blue, rejected, and look at this selling. All right, dripping, just this. Then we push back up here to test it, and we couldn't get separation above, and then we're back down into it again, testing the bottom of it here, right around this 3580s. And look, so we had a week here. Next candle does what? Pushed us back into it, and then we're pulling back, right? So what's interesting here? So from the 3580s all the way up here to the 3814. So you could just say like 3600s by 3800s. It depends how you want to look at it. We're in this box that for some strange reason, the buyers won't let us sell below and the sellers won't let us buy above. So the oxygen is thin on both ends of this, right? So on this side, you can say you're getting too far into outer space. There's not enough oxygen. And so you pull back in to where there's more oxygen. And down here, you can say you're getting too deep in the ocean. There's no oxygen. You pull back in. So a break outside of this will be interesting, and not a break like this, right? Where we see a bearish candle that's then bullishly engulfed the next day. Not that. We probably need to see multiple days selling below this area that will then open up maybe more. And usually when that happens, right, the target is about two, whatever the length of the channel that you're in, or the consolidation area that you're in. That's usually the length of the move once you break outside that area, right? That's how I always do it, right? And me, I'm a person that I'll take 50% to 50% of that move. I'm already getting out the majority of my play, and I'll leave the rest. That if we get a 25% retrace, then that'll take me out, because I'm not, I don't let green go red. Period. That's not gonna happen. So guess I want to hold for the full move. But for me, my first area of any turbulence, I'm out 75 to 80% of my move. And then I let the other 20% ride. And then that could go back, and I will not let that, even the 20%, I won't let go back to exactly break even, but I let it go back to close to break even. So and I know this may be one of the longer videos, because I missed last week. I'm so excited about this, because this is basically what I am looking at. This is my watch list. This is how I trade, right? This is not like stock tips. This is not alerts or any of that. This is, hey, when I look at the market, when I trade, this is what I look for. These are the things I look for on the intraday. I look for patterns and areas of where buyers and sellers disagree. Where's their price acceptance? What is the pattern? What's everyone else seeing? Where is everyone else placing their bets? Where do I think that they feel comfortable? Where do they feel confident? And I want to ride that wave. That's it. Nothing. There's no voodoo or no magic or anything. It's technicals and looking at where other people, can clearly see areas of supply, demand, support, resistance. That's it. So watch this area here and see if there's price acceptance lower, and if we see continuation and increased volume. If we continue to retrace back within here, the area that I would watch if we bounce here is, I see that on each time that we've touched down here around the 3580s on the retrace, we went back around, let's see, minimum of, looks like around 3610, right? So this is the window that if we hit here, we should pull back to 3610 at least. That's what we've seen in the past. Will it happen again? We don't know. Would I play this? No, I'm not playing that. I'm not getting long off of this. On the intraday, I might play it, but then I could have really tight stops, right? And it's not that big of a deal. But it would be an intraday pattern that I would look to see. Even though I'm seeing this on the higher time frame, with earnings coming and with all the stuff that's going on globally, I'm just being really careful, because you can be technically right and then get fundamentally washed, right? So anyone that was looking at this candle here as a sell through, and then they were trying to fade the back test of this area into the 3580s, they were not wrong. You weren't wrong to fade the back test in the 3580s. But where you will be wrong is if once this crosses 3610, if you're still trying to fade that, right? Once it crosses that area, you got to get the heck out. Because I faded this and I got the heck out when it crossed 3610. I'm like, oh, heck no. And then I went long. I flipped the other way. When we pushed higher and we started to consolidate around, I believe it was the 36. Where was it? I think it was the 3660s. Because there was a hitch around. I'm just giving you my recollection. There was a hitch around the 36 40s was a sticky area. And then we pushed 3650s, tapped 3660s, didn't hold, pulled back through, and we pushed back through the 3640s into the 3630s. Then we got volume, we remounted, and we climbed back through the top, and then we rocketed through the 3660s and 36 into the 3670s, and then we gained greater price acceptance higher, right? That's what I remember. And that's my memory of the trade, right? That's what I saw. And so my mind is funny that way sometimes. But so all that is to say is, just because for me, a back test up here would have been something that I play. Guaranteed. You broke this bottom. A big candle. But the back test I'll play, and then my stop, always play it with a stop and learn and just get the heck out if it's not working for you, right? It broke back above. I think there's some sort of consolidation that we broke above, and then we just started greater acceptance. My buddy said, "Hey, 3630s break, run." I was already out before that. When I saw the acceptance around like 3610s, it kept holding that area, and we started to push through that. I'm out. Good night. No, thank you. And so that's what we look for. So now that we're going back down here, um, we have to see if sellers have the appetite to try to draw us lower. And if they have the appetite to battle the bulls and push this lower, we have to see. And also what results we see from earnings as we go into earnings week. So just be very careful and don't be afraid to size down and don't be afraid to sit out because cash is also a position. I know I'm going a little bit long. I'm going to speed it up because I know the the kiddos are going to start vying for attention. And why do we have a lag here? M&Q. Once we get to that, one of my favorite. Can I say favoriteest? One of my favoriteest instruments, if that's a thing to say. So looking at the M&Q, and you see that it has a different structure and different setup. And that's one of the things that we noticed this week that we were discussing is that there's a separation between how the ES is trading and how the NQ is trading, right? And so when we saw this pullback into the 11,700s, let's look at this zone. It's a similar setup to what we were looking at over on the ES on that pullback into that zone. And then we sold below. If you look at all the things that we have set up, also on the RTY, pull back into the zone. That was a previous area that we channeled around in for a bit. And then we pulled back into that area. And then we couldn't find price acceptance. And we went back down. And so on this drop here, right, this is the area right around 10,940s. So 10,940 is where someone will say, hey, I pushed back into this area the last time we were here, go long. So on this test, you'd have been right, on the 4-hour. But then you see greater price acceptance below. And now and this is the thing, if you short this 10,940s, right, you kind of have to look at this and say, I've got to hold price to see if we break above 11,117s, right? And so if you're fading this area here, if you get short here at 10,940s, technically, right, your stop. So if I'm saying, oh, we're breaking below, I'm seeing price acceptance, I'm short, your stop needs to really be up here around this 11,120-ish area. And that's where your stop would need to be. I know it sounds weird, but that's how you got to play it, because if you look back at this previous candle structure, when we've touched here, the extension before you saw any reaction was up here, right around 11,117-ish, 11,120-ish. Here, we see that we pull back here to the 11,120-ish, dipped. So now we're going, watching this area, and look here, the structure here, on Thursday, 29th of September, the structure there. We saw a reversal here a previous day on the 28th of September, back to that area, right? This pattern repeats. So when you see this and you separate to the downside, this area could be a stop. This 11,057 potentially a safe stop, I guess. But up here is a better area, 11,120s, right? And so if you were short here, pull back, you just stayed in, back down, but you still haven't gotten your movement yet. And I doubt you would have held through news, even though we saw this dip. So now we're pushing back up. But what do we not see? We don't see any buying above the 11,120s. Though we see this spike in this extension, we don't see a candle close up there, right? We don't see continued bullish action above that like we saw here. This looks very different. We pulled back to that area, sellers stepped in and drove us back down. So what we should be watching for on the NQ is, do we go back through the 10,659-ish area, and do we continue to go down? And if we do, what we have to look at now that we're down here, and this other thing to watch too, if we bid back up, watch for the 11,120s and see if we see continued bullish action above that, right? And if we do, then your next target would be 11,260s, the 11,380s, 11,514s. And if we get through the 11,700s, you want to see bullish above that, then we may see greater price acceptance into the 1200s. That's possible up top. If we continue to go lower, watch the 10,650s here. If we go below it, let's flip to the weekly chart, see what we can see there. And it's funny, when you're going to the weekly chart, you know that the market's gotten a little bit nutty, right? So here we are on the weekly chart, and this is an area that a few of us were discussing quite some time ago. I believe it was, what were the months? August, September, October, and November of 2020 is really interesting. And we were talking about this in April, and we were putting on positions in April because we were like, hey, it's a risk, but the return will be great. Do we believe that we could gain acceptance into this area before the year ended? And we kind of did. Oh, wow, we did. So looking at where we are now, let's sort of squeeze this up. We're back to the breakout area, right? Of 2020. Look at this. And so it's almost the same exact pattern that we saw on the RTY. I don't think we did we do this on the MES? I don't remember. But we're back testing this breakout structure, right? And you see how this looks different. So if we gain acceptance below this area, right, the next area to watch is, do we get below 10,336? And if we do we then gain acceptance back into the price levels of the mid 2020s? And then, this area down in here, do we start to see a little bit of a dip? So we'll see if we see that. But you can see the volatility and the strength of these candles, how big some of these candles are in comparison to pre-pandemic, right? So I think this is interesting. Not pre-pandemic, but the time right before the pandemic. Look at this as we entered into it. Look at that. And look at these nutty candles. So we'll see. But this is a back test of the breakout structure, and we have to see if the buyers are interested in holding it. But that's really interesting, I think, on the weeklies to watch sort of where we've come from and where we are right now. And price acceptance. I think that's really interesting. And hopefully I'm not, dwelling too much on some of these. Apologize, but that's how my mind works through when I'm looking at tickers. And I'm going to jump directly to the SPX. Michael, I apologize that it took me so long to get back to this. But I'm gonna do it right now. SPX. So remember this channel that we're in, right? And we all remember, where's the bottom of this bad fella? Right now, 3,300. Depends when we hit. Are we going to hit the bottom of this bad fella? Well, if we look at this channel says that yes, we are. And I know we'll look at sort of how we've sort of paused around this 3580s area and use that as a reason as to why we're not going to go lower, right? But you can look back, whether it's in March or if it's in what's this area here? It's in May, of times that we've paused at areas where it seems as if we were not going to go below. When we're back at the 4100s, there definitely was a thought we weren't going to go back below that area. Why? Because we saw test, back over, then we rejected, back here, test, back over, test, below, almost, not quite, then we sold, right? So my point is that what we want to do here is we want to assume that this is probably going to go to the bottom, right? But for me, the way that I play these types of things is I hang verticals that are like leaps. I just hang stuff because I'm not, for me, I'm more of an intraday trader. So I just hang stuff out there that's inexpensive, that if it gets there, cool. And it's like, yeah, that's great. But it's like a technical setup that I see on a higher time frame, but I have to give it time to work. So I just hang stuff. The chances of us getting to the bottom here are pretty high. We'll see what this earnings season does, but there's a lot of turbulence. Unless the Fed is going to stop raising interest rates and decide that they're going to start buying corporate bonds and pushing things back up, then it's a good chance that we're going to get down to here. the real estate market is still, even though we've pulled back, it's still overheated, right? Even though we've pulled back in the real estate market, the prices aren't where they should be. If you're looking at a baby like a 4 or 5% gain, in some places the market jumped up like 40-50%. A 10% pullback is nothing. That's nothing. That's not that doesn't even push it back to what the number should be. And so I think that what Powell is trying to do when he's talking about raising interest rates to be able to bring down the cost of real estate, he's looking at it from the perspective of what where are we supposed to be in growth if it was the typical 5% roughly per year growth in the value of your house. And if in some places like where we are, you've gone up 40%, he's going to look to carve out over let's go back 2 years, 20 to 30%. That's why he's saying he wants to see a 20% pullback in the market. So we'll see if he accomplishes that, or if the Fed feels so much political pressure that they back away from that and they start to sort of ease on the rates. But the problem that they're having is that inflation is starting to rise again, right? And what's going on? We're headed into the holiday season. People are going to do whatever they have to do to get the things that their kids are desiring. So if you think that the market is going to cool, I don't think so. I do not think so. I do not think that the economy is going to cool because we're headed into the holiday season. It's almost like the perfect storm. And what's going on sort of globally in other central banks and the things that they're doing to try to preserve their economies and sort of preserve just their ability to be competitive on the world stage. There's a lot. And sometimes those things are at odds, right? Because at odds is for for me, right? A strong US dollar is great for me personally, For me personally, when I travel, when I do things personally, I want my dollar to be strong. But for exports, right? A weaker US dollar is better. So I think all those things are very challenging, and it's sort of at odds with from a political standpoint, people usually don't understand that. Pardon me. Oh goodness. You kids get competitive over games. So so we'll see how this plays out. But the answer to Michael's question, look at this channel. And no one could really predict what's going to happen next, right? We just play the patterns that we see and we played our probabilities. So there's a chance that we end up down here. Whenever that happens, that we're going to touch this bottom, there's a chance of that, right? Now, when we were here, were we thinking we're going to touch the bottom here? Yeah. And what did we do before we touched the bottom? Ricocheted and went right back to the top. But each touch of the top has led to a touch of the bottom before we've touched the top again. So this touch of the top, if you're short, you just have to be out far enough to be able to take this pain, right? And so I'm not saying to get short. Everyone has a different risk profile. Live by your risk profile. What can you afford to lose against what do you stand to gain? And never put yourself in a position to blow your account. Never put yourself in a position to give back the entire gains of the week. Just don't trade that way. Trade in a way that if the worst case scenario happens, it doesn't blow your doors off, right? When you watch some people and they're like, oh, I made $500,000 and $700,000 on this one play in this one week, or this one day I made $120,000, right? Ask them, what are they risking for that? What's their risk? What are you risking to make that? And for most people, this is the thing, and this is the thing that you have to realize with a lot of the people that like our group that we trade with. Trading is not their entire what's the word? It's not their entire way of making money, right? So we make money, we invest in real estate. It gives us other income, right? And for people that either make money like that, like their job is to give alerts and stuff, and that's how they make their money. That's their way of making money. They will take risks. and sometimes they're not transparent on when they get blown up. Like for me, you want to really be careful to never put yourself in a position to give back your entire week. And if you have a bad week, not give back your last 2 weeks. And if you have a bad 2 weeks, not give back your entire month. And so you trade in a way with a risk profile that protects you, right? I stick to blue chip tickers. Do they move erratically at times? Yes. Every now and again, will I take like 1 or 2% and put on a penny stock? Maybe, but I don't even like pennies. I like things like this that to me are crystal clear where it's going to go. I'm not playing the lottery. I want consistent gains every single week, and that for me is I enjoy it. I enjoy playing patterns. I like a pattern. It gives me comfort, and if my pattern invalidates, then I'll look for the next pattern and I'll play that pattern. That's it. So we'll see if this makes it to the bottom. But some people sometimes you can call it luck, whatever you want to call it. For some people that are like, oh, I got a 10,000% gain on this. Is that possible? Yes, but that's rare. Look for singles and doubles, and as in this last few weeks of trading, when the home runs come, more to the better, right? But your goal isn't a home run. Your goal is to singles and doubles, get on first base, get to second base. You send your money is like soldiers. You send your money out to conquer and to bring back more money with it, right? So every dollar I send out, I want to bring back 2. And so that's your goal. If it happens to bring back 10 for every $1 you send out, that's not your goal. But if it happens, it's great. So you plan and don't get greedy. It's a couple of guys this week that got hammered, right? Because they were a little bit greedy and they didn't want to exit, their gains that they had. So you got to be careful. There are a lot of people that made a lot of money on Bitcoin, a lot of money on when the market was trending up. And when the market began to pull back, they were hesitant to reposition or to get out or to hedge. Don't get greedy. Don't look at the money. Play the setup. If you play the setup and you stick to your rules, the money will come. Okay, off my soapbox. So we'll see how this plays out, guys. There are a lot of variables that are outside of our control, that are more in the control of the central bank. I'm trying to keep an eye on my son. Oh gosh. But Michael, this is what could happen. We'll see how it plays out. Let me keep moving because we have a few more tickers to get through before I Okay, so Amazon, we are back around the 106. We've discussed this before. So we look at this candle structure here. Potential is for us to get down around 102.60s, maybe a little bit lower. Maybe the buyers will step in around here. We have earnings coming on the 27th of October. We'll see how that plays out. And I think no matter how far Amazon goes down, we're headed into earnings season. And there may be people that feel that when it gets down here around the 100 area, almost to the 99 area, that it's a buy. So keep an eye on options flows and keep an eye to see on money flow to see if money is flowing into something like an Amazon, right? But where we are here, once we dip below this 124, what did we say the potential was? That we could see a dip down here to around the 106. The next stop is the 95.20s. It's possible, but it's a long way off. And we could see a reversal right here around the 102s. We'll see how that plays out. Let's see. Yeah, we'll see how that plays out. And so we'll see how this goes. But we see that when we get down here around the 102s, that buyers have stepped in the past. So what I would do, like, let me tell you how I'm a weird trader. I would just, where's my horizontal line here? I'll get this and I'll put this right where the pop purple is. So I'll ride the pop purple across, but I don't want this to be blue. Well, I guess it could be blue, but this is the area to watch, right? And I'll adjust this line later because it may not be similar to these because I don't know if there's another, it's multi-month. I'll look at this another time. And so I'll put a pin in this. But when we get down here, I do want to be aware of it. So I'm going to add, I don't want to add an alert on the horizontal line. I want to add an alert above the horizontal line so that I'll get an alert before it gets there. And I want to see what happens because what I want to do is I want to see what price is doing when we get down to that level. But you see these different levels down to 95.27, and let's see if we have lower. I don't have lower, but it could go lower. It's potential for it to go lower than that. But we want to see what happens here. If we get price acceptance below the 100 level, then watch out for 95.20s because that is, that's possible also if we get down there. So we'll see um, what happens there. That's actually pretty interesting on Amazon. Let's keep moving. Netflix has earnings coming up. So the way that I was playing Netflix, this is the pop purple. And so we rejected. We haven't had a single bullish close above this since we pushed up into it. And so that's been a great area to sell above, and also a great area to short and expect that within 2 to 3 weeks that price will retrace, right? And that where will price retrace to? That price will within 2 weeks retrace to at least the 239 area, right? And so that's sort of been the play. Right now, the play is that I am not in right now because okay, price can technically go down to the 220s, like 224, maybe even lower down here around the edges, around the 216s. That's possible. But Netflix has earnings coming, and what I'll probably do for earnings is I gotta have to talk to Elisa, get a great strategy for earnings, but we're gonna get a low cost strategy for earnings to play this. So no matter either direction that it goes, that we profit. But watching Netflix now, I'll just be careful. Earnings is coming. We see the lines 239. Up here, we have 265. We have 204, then 174. Based on these earnings, the movement, what can happen, it can go either direction. What Netflix is doing right now, they're doing a little bit different than I thought they would. And let me slow down my speech because I sometimes speak a little quickly. What Netflix is doing is they've launched a less expensive package that allows people to get access to the platform, but you're going to have ads, right? That's fine. Many streaming services have ads to support what they're doing. I like what Netflix is doing because they do so much original content that even with that lower package, I think it makes sense. We think about this, right? And for the people that are complaining about their ad supported package that they've launched, the number one thing that people watch, show that people watch, is live sports. Live sports has one of the highest Nielsen ratings, right? And what do all live sport events have? Commercials. Do people care? No, because the content is so enticing that they're willing to swallow the commercials. And people have not cared for decades about commercials. They just care about how great the content is. So I think what Netflix is thinking is that people don't care about commercials if the content is strong. And a lot of the content that they put out, whether it be series or whatever, they have really strong followings. People watch season to season to season to season to season, right? And so if you have a customer base that really digs the content, then you don't worry about the commercials. And so I tell you, when I'm not, my son is hilarious. He's finding things that have been lost for months. So cool. So bottom line, they're right. The way that they've been doing their earnings has been wrong. Focusing on new subs and eyeballs and that's ridiculous. Focus on what you do have and what you can monetize. It's like back when I used to be heavily into online marketing. The people that were killing it, like you'll burn yourself out trying to always acquire new customers. You get rich by fully monetizing and servicing your current customer base. Yes, you do things to sort of add to that, but it's like the difference between being a person that has to go out and hunt and a person that has a farm, and you have 100 sheep, 1,000 sheep inside of a pen, and then you have your cows and you have your chickens, and if every time you had to make a scrambled egg, you had to go out into the wild and find an egg to bring it back, your family would starve. It's a ridiculous concept. It's ridiculous, right? And so what they're doing now makes more sense. They're servicing their current consumer base. They know what they like. Create content for them. Focus on them. Focus on what you have. Monetize them. And what's funny, it's a little bit different than what I thought that they would do. I thought that what they would do was that they would work the advertising into the content the way that Transformers did, where you see like all the vehicles that they use are Fords, all the toothpaste they use is Colgate, all the if they're using it, someone's using an electric toothbrush, it's a specific electric toothbrush. If someone's wearing shoes, they're wearing Chanel pumps or whatever it is, whatever red bottom, whatever it is that people are wearing, right? All the bags are X, all the sunglasses are Y. That people are sort of wearing brands that are recognizable by certain people as a brand. So they're reinforcing that brand for people that like that brand, right? So I think that that's what I thought that they would do, that it wouldn't be just straight line advertising, that it would also be advertising in context of the content. So we'll see. I love marketing. I really do. So let's keep moving. So we see what happened with Netflix. Earnings is coming. I will probably hang a strategy for earnings to expect like a 5-point or greater movement or 10-point or greater movement. We have to see. I have to dig into that. I'm gonna do some research on that before earnings. So we'll see what we put on for that. But Netflix is interesting. I love their new strategy and I hope it works well for them. NVIDIA. Chips are under major pressure. The Biden administration put a big damper on China and chips and a lot of companies. So keep an eye on chips because they may be about to take it really heavily. Him banning the export of chips and people that are American citizens working with chips in China or working for chip companies is a big deal, right? This is probably one of the biggest blows that China is going to take from from a sanction standpoint, right? That the US could do, because one of their strengths is their chip industry, is their technology. It's a big deal. And one of the things we have to ask ourselves is, how does this impact Tesla? Does Tesla, who has one of its large production factories in China, does their inability, do they use what type of chips do they use? Will they be impacted by that? Remember, we just had a major issue not too long ago where there weren't enough chips to be able to sell new cars, right? So there were all these cars that were being made that were just sitting that could not be sold because it didn't have chips for the key fob, didn't have chips for the car, because the computers in the car didn't have chips. So they couldn't sell those cars, which caused a huge supply demand issue in the used car market, which boosted the price of used cars. Big deal. So remember that, right? There was a chip shortage. So now again, is Biden creating a chip shortage in China and with what he's doing? So this is going to be, one of the largest economies in the world now does not have access to chips. And the people that have the know-how of how to, like, this is an interesting thing. So let's see how this plays out. But I'll be very careful around chips companies with that headwind and that potential. But looking at NVIDIA, right, on this 4-hour chart, the next area we have is 94.25 if we continue to sell. And then below that, I'm going to put some, do some more technicals, draw some more lines below that. But if we happen to regain this upper area 119.07, then 138, let me pull up the weekly on this, like I was doing for the others, real quick and see what we've got going on. So if we look at NVIDIA, it's working out for a while. So you see a shelf here at 107.05, then another shelf here at 97.40, then another shelf here at 87.39, a small shelf at 91.68. That's what you keep your eye on NVIDIA, right? And I'll go through and do these lines later, but make note of that. Set it in the video. You can make a note of that way. Let's and the short side has been paying so well earlier in the year. It's a beautiful thing. NVIDIA. Let's move over to Microsoft. Boom. Okay, so Microsoft, this was a short area here. Since then, look at the back test into this area, failure to go back up. And what you look at when you see pattern changes, go back here. So you see in July, bottoms, reversal, bottoms, reversal. Look at that, taking off to the top, right? That we did accumulate below that area in June. We pulled back through it, back down, back through it, found a bid here in late June, took off, right? Even though we tested it, we took off. So now when we sell below this area, once you're here, I would not even be playing this. I'm gonna be honest with you. And the reason I would not be playing this is because even though I have my lines here, right? And you could take small, intraday trades on intraday setups. But for me, I prefer this. This pull back into the pop gold, inability to break above, to fade that. That's my play. That's the play that I like, right? Because for me, this area, we see the greatest separation from this area, and then we see this. It's beautiful. And now here, this potential previous consolidation, we're back testing it, then we back down again. So I think those are the types of trades that I like, where areas where there used to be a demand, like a buying area that we sell through, that now becomes a selling area when we pull back into it. I love those patterns and those setups, almost as much as I love the M pattern and the W pattern and the cup and handles, almost as much as I love those. Almost. It's a beautiful thing. So watching Microsoft, the levels that we're going to watch next up, 221.71 if we continue to sell. We have to break below this consolidation around 224.30s. We have a green line here around 217. And this before was I call this my trap door, my swing door. Below this area, I'm more bearish. Above this area, I remain bullish. So if we sell below this area, next up, we have the 215s, 213s, and the 208s. Earnings is coming at the end of October. Looks like the 25th. I will probably be playing that, but probably multi-week. Probably be out 2 or 3 weeks on that, playing the earnings on Microsoft, because it's like I'm not really playing the earnings. I'm playing for a movement based on whatever the earnings do, and it's going to be something inexpensive. I'm gonna be 100% honest. Like I probably won't spend more than $250 or $300 on this to play both directions. So I'll put on something on that. Just depends how I feel as it approaches, and if I get any information from the people that actually trade it actively. If I hear anything from those people that are heavy investors in Microsoft, that they have sort of a hint of where it may go, I may just stay away. But usually out for earnings, I just hang stuff out there, and whatever I hang out there, if it doesn't move at all, I'm okay with that too. But I have a few weeks for that play to play out. It's not only on the earnings. It's if over the next few weeks this thing, moves in either direction, the thing works, get paid. Okay, that's Microsoft. Oh, I didn't mention to the upside. My apologies. So if Microsoft buys back up 229, 231, 234.84, then back into the 240 area. That's interesting. We see the consolidation here, multi-day, like rejection candles. But even with that, we hit here, we gapped up. In the words of Tim, the best way through resistance is to gap through it. That's the best way through. So let's keep it moving. I'm being attacked by the baby at the moment. Here you go. He's like, bribe me with cookies or sometimes chips. It depends what he wants to eat at the time. All right, let's keep moving. Check out Apple. So Apple finally came off. It's been a while. And honestly, for Apple to look like some of the other tickers, it has a ways to go still. Maybe down here around the 131-ish area. So we'll see what Apple does. Earnings is on the 27th of October. Next up on Apple, if you go to the downside, is 137, 134, 131, 127, 124, have it even lower. We happen to bounce back up. 141, 142, looks like 144, 147. We'll see how Apple plays out. They have a lot of challenges right now. And even the chip situation in China, you have to wonder if how does that impact American companies? That's definitely something to read up on. That ban and exactly what companies are impacted by that and how that impacts their manufacturing going forward. Because you gotta figure out where companies are getting their chips from and where they're being produced and what companies are impacted by this. So it's really interesting to watch. Meta, I believe they just came out. Okay, so if you watch some of the previous videos, one of the things I really got into was that Meta was trying to pivot away from their advertising business, as you know, some of my compatriots that are still heavily in the marketing industry would say. Um, they definitely have been pivoting. That's how they've been, blocking and shutting down advertiser accounts and sort of pivoting into the metaverse, right? But they're saying that that pivot hasn't gone well, and that they're having a tough time um, gaining ground in that area, right? And what's funny is I got to give tip of the cap to my buddy Tommy. What Tommy told me was, um, he said that there is no reason because when you look, he said just look around, right? And there's no reason that people are going to go through Meta because he believes that the metaverse is influence based. He said the power in the power right now on social media, the power on all these platforms are influencers. And so it's better for a brand to attach itself to an influencer than to attach itself to another brand, if that makes sense. So rather than attaching yourself to Facebook and going through their onboarding process, it's better to find the influencer that has your target audience and then do business with that influencer. That's a better way to go about the metaverse. So I mean it's interesting. I'm not going to get into the conversation because we had a really in-depth conversation. He had some great insight, and he's 100% accurate in what he was saying with the way that it's looking right now for Meta. Because I thought what Meta would be the conduit for a lot of these companies to get into the metaverse and for them to be able to um, build out properties there. So, like if I'm Apple and I'm coming into the metaverse, and um, Facebook has this great onboarding process, or if I'm Costco or whatever, they have this great onboarding process that I would just plug into the process and the system that they have into their infrastructure, into their what they have. And so me being Costco, they wouldn't put me right next to BJ's. Me being Costco, they wouldn't put me next to a smoke shop. Me being Costco, they wouldn't put me next to one of, you see what I mean? That they would make sure that just like in the physical world, that when you go to a company, when you go to a business, usually the business park, right, is set up with companies that market to similar minded clients. You know what I mean? You're not gonna have a gun shop right next to Costco or a gun shop right next to Toys R Us. I don't know if there are any Toys R Us left, but you know what I mean. So it's like the way that you place that, you kind of want similar minded, similar thinking individuals with shops there, right? That sort of service the different needs that particular uh, clientele may have. So that's interesting. So keep it moving. Watch Meta. The levels to watch next up: 121, 114. Earnings are coming. It could get nasty. I will probably definitely be playing. We see how I don't have lines down there, but I will draw them. I'm going to flip over to the weekly chart. I'll flip over to the weekly chart. Boom. And what we see is, hey, big guy. Hello. Come here. One of the things my son loves to do is he loves to cut off my computer. So he gets to the power strip and cuts everything off. It's hilarious. especially when he does it while I'm in the middle of a trade. um, I took a big loss the other day. And then, the different conversation, I'm gonna get into it, but it was hilarious because I was getting ready to exit with a nice gain. And in the time he cut off my computer, so he hid my phone because that's usually my backup plan. He had the phone and he hid the phone, and then he went under my desk and he flipped off the power switch, and it cut off the computer. By the time I got everything back on, I was down so much. It was hilarious. Oh gosh. It was too. My wife was rolling. It was hilarious, but all good. Part of it's why you don't take it personal. Like if you lose, have like a nice drawdown, like a couple thousand or something like that. Don't worry about it. So it happens. It's part of the game. You make a couple thousand the next day or the same day, depending on how you trade. But if we're looking at this, the last time we were in this area was the 2018, right? And the buyers did step in. And if we look at this, we're below Facebook's or Meta's breakout area, which is from 2017. That was this breakout area. And so it really has not been down here since 2018. So we have to kind of watch to see if we see acceptance lower. And then we'd look out. You see, we have the 115 area here, of course. But below that, we'd be keeping an eye out on the 106 area. And then the 101. And then down here around the 95. So we see how that plays out on Meta. Not going to dig too much more into it. And I'm almost done because this video is probably going to be super long. Just skip around to the things that you want to dig into. Honestly, because I kind of got to go through some of these things. Tesla, can't forget Tesla, who has earnings coming up this week. Tesla, and shout out to some of my boys we've been short this bad fella since way up here. And you kind of play in between, but you have longer term plays. This is awesome. So next up is 188. I have a buddy that says it's going to 180, 154. I'm going to hang a strategy on this for earnings. This is Wednesday. Yeah, I'm going to hang a strategy on this for earnings. The expectation of a 10-point plus move. We'll see how that plays out. But Tesla's definitely under pressure. And so watch 188, watch 154. If it pops back over 208, we could watch 231. We'll see how this plays out. Below this, let's see, we have to flip to the weekly here on Tesla. But you can see it's we'll see, right? Because this is the area, this 208 area is the area that buyers, it was 216 to 208 is where buyers have been stepping in. And we're seeing price acceptance lower. We'll see what next week looks like. We see continued price acceptance lower. And if we do, then we're going to the 180s. So we'll see how that plays out. But Tesla's just been weak. It's been weak for quite some time. And it's been a good short week to week. I do like Tesla a lot. So we'll see, meaning that as far as the movement. So we'll see if it continues down. These are the areas that I'm watching, the price points that I'm watching on Tesla. We'll see how it shakes out. And what else would I like to take a look at? Oh, CVX. I don't have anything. I just want to see what the charts look like. That's interesting. That we saw a pullback this week. You would think that we would see a pop here on all oil because of rejection of the pop gold. Look at that. Every test of that area has been a short. Shouts out to Sophie. Definitely she loves oil. But we'll see. Because you would think based on what's going on with Saudi that we'd be seeing a type of like some sort of a pop, but we'll see how that plays out. Let's go over to CI. So CI popped above this consolidation area here. Nice spike. But we retraced. We're still above, even though we had a pullback in the market. This is still above that area. So based on this, right, this is the first multi-day candle above the 291-ish area back to back. So we'll see if this has changed, and then we see an extension back into the 300s and higher. So that's interesting on CI. That's something to watch. So I might actually hang. Let's see when this is November. I might actually put on a strategy on this for more upside. I'm gonna have to go check out the options flow. I've seen sort of see what's been going on with CI here, but it is above this consolidation area, and I do want to see if we see continuation. But look here, we were below the consolidation area, and we still pulled back through it, bounced around, and popped back through the top. So just because we sort of fired out of this, it doesn't mean we're not going to pull back inside. So this is something to watch to see if we continue higher. So for me, I'm not going to jump in directly. I want to see us to continue to build and go higher here, back into the 300s, to prove that multiple green days, to prove that we truly have separated from this consolidation area and that the buyers see more value to the upside. That's what I'm looking for on CI. Take a peek over at the SPY, then the QQQ. So peeking at the SPY, the next levels that we have, if we continue to go down, 351, 344, then back to the 339s. If the buyers happen to step in, we could definitely go back over 358 and see a pullback into the 360s area. Just be careful on whatever you enter, and remember that we're in a super risky market. If you want to keep an eye on energy, I didn't get into energy, but energy should definitely, as inflation abates, energy should go down. These companies cannot keep making record profits. It's going to retrace. We're headed into the winter. And so just keep an eye on your energy and utility products. It's going to get interesting for them also. That is it. I don't think I'm forgetting anything. I don't really think that I am. I don't think that I am forgetting anything. Of course, this retraced. This garbage. Oh, big guy, you okay? Okay. I'm almost done. Okay. I'm not gonna get into this. I'm gonna keep it moving because I know but for those that had the patience to hang orders out till Christmas, this is doing well. So let me leave this alone. Go back to the SPY. If you enjoyed this video, please don't hesitate to go to our channel on YouTube, Power of Pivots, and subscribe. And you can look forward to receiving more videos from me and more content from me, different types of videos when I find the time. Just have a lot of stuff always going on. Just so busy, so many different business situations. And just thank God for the blessings and the opportunities. Please continue to check out some of our videos, and also you can look forward to receiving content from Melissa as she goes through her Power of Pivot strategy, how she finds those great pre-market, intraday, and post-market entries. She's been super busy too. I know that a lot of you guys are waiting for her to start popping out videos again, and she will. It's just she is. I think we all at different points have callings on our lives and things that we do that we're just so great at. And when people are willing to compensate you very well for those things that you're great at, you kind of got to also do that too. And then you have to just find the balance when you're trying to balance those things with family. Sometimes it takes you time to get to the things that you also are passionate about. But, please continue for everyone that's trading. If you're having a tough time, you never know. Like, you just have to focus and try to find your stride. And remember that you're one trade away from figuring out a new system, a new way, one trade away from regaining your confidence, one trade away from understanding, for you personally, what's the best system. For some people, it's short term, and you really have to look at your psychology to figure out what suits you. Don't look at the gains that people have, and based on their gains, try to adapt your personality to the way that they trade. Figure out your personality type first. And if you're comfortable with big size, with big drawdowns, with big positions, if you're comfortable with options or shares, if you're more of an investor, are you a day trader? Are you a swing trader? Find out what fits your psychology first and operate from that to then say, okay, let me go find the system that fits me. And that's really one of the most important things that I could share in this video if you made it through to the end. Have a blessed week of trading, and keep in mind that you're only one trade away. Thank you.